Subscribe to my channel Report Stock.
Okay, let's unpack this. Imagine getting a shortcut to really understanding a major player in the global digital economy. That's exactly what we're doing today as we dive into Sea Limited's second quarter 2025 financial results. Now, for those who might be new to them, Sea Limited, they're a big global consumer internet company out of Singapore, built on three core businesses. You've got Garena for digital entertainment, Shopee for e-commerce, and Money for digital financial services. And our mission here really is to pull out the most important bits of knowledge, the insights from their latest report, to give you a really clear picture of how they're performing and what it all means.
Exactly. And what's so compelling, I think, is how these results give you this comprehensive snapshot. It's not just about Sea's own health, but you get these crucial insights into the bigger trends, right?
Yeah.
E-commerce, digital finance, online gaming, and all across these really fast-growing markets. It's a gold mine of information.
Absolutely. So let's start with the big picture then, the headlines, because they tell a very clear story. Sea Limited's CEO, Forrest Li, he kicked off their report basically saying, look, the momentum from the strong start to 2025, it continued.
Yep.
Okay. He said, all three of our businesses have delivered robust, healthy growth, giving us greater confidence of delivering another great year.
Yeah.
And the Q2 numbers definitely back that up. Total GAAP revenue, that's the standard accounting measure hit, US $5.3 billion.
Wow, 5.3 billion.
Yeah, and that's a significant jump, 38.2% year-on-year. Gross profit, US $2.4 billion, up even more, 52.1%. But here's the real headline, I think. Profitability. Total net income soared to US $414.2 million.
Okay, now compare that to last year.
Right, is US $79.9 million in Q2 2024. So that's a leap of, get this, 418.3%.
400%. That's huge.
It's massive.
Yeah?
And if we look at adjusted EBITDA, which, strips out some items to show core operational profit,
Yeah.
that nearly doubled.
Yeah.
US $829.2 million compared to US $448.5 million last year, up 84.9%.
Yeah.
Mm-hmm. And zooming out a bit, strategically, Mr. Li also laid out this kind of pivot, didn't he? He said something like, given the market potential and where they are now, they'll keep prioritizing growth. But, and this is the key part, at the same time, our company has reached a stage where we can pursue growth opportunities while improving profitability.
Right, which is the big question, isn't it?
Exactly. How are they actually pulling that off? Especially after those periods where it felt like growth was, well, everything, at almost any cost. These numbers suggest maybe they've found a new balance, a more sustainable way forward.
Yeah, it seems like a different kind of growth they're chasing now. And you really see that, I think, in Shopee, their e-commerce arm. Mr. Li called it another record-breaking Q2 right after a record-high Q1.
Mm-hmm.
Their GMV, gross merchandise value, the total value of stuff sold, grew 25% year-on-year in the first half.
Yeah.
And get this, Brazil seems to be a huge win for them. Shopee just had its 5-year anniversary there.
Ah, Brazil, yeah. Big market.
Huge. And they're saying it's now the market leader by order volume and it's operating profitably. That's key. Looking just at Q2 for Shopee, gross orders, 3.3 billion, up almost 29%. GMV hit US $29.8 billion, up 28%. GAAP revenue for Shopee, US $3.8 billion, that's up to nearly 34%. And here's the real game changer. Adjusted EBITDA was positive, US $227.7 million.
Positive, after being negative last year.
Exactly. It was a loss of just over $9 million in Q2 2024. So that's a massive swing. If you break down the revenue, the core marketplace stuff, transaction fees, ads, that was up a huge 46.2% to US $2.6 billion. Value-added service like logistics, that also grew, but more modestly, about 2.9% to US $743 million.
You know, that shift in e-commerce from an adjusted EBITDA loss to a pretty significant profit, that's probably one of the most interesting parts here. It really signals something, not just for Sea, but maybe for the whole competitive scene in Southeast Asia and Latin America. It suggests they've figured out that balancing act growing fast, but also making money on each transaction, more or less. Which, is tough. And it's also worth pointing out their sales and marketing spend for e-commerce still went up, right?
And it did, up to 19.4% to over $800 million.
So they're still investing heavily in growth and grabbing market share, but clearly with profitability much more front of mind now. It's not growth at all costs anymore.
Definitely a shift. Okay, so from the bustling online shops of Shopee, let's shift gears to digital finance. Money. This segment is putting up some frankly, eye-popping growth numbers. Mr. Li mentioned excellent growth in the first half, and he stressed their diversified loan books and, importantly, high asset quality through prudent risk management. Let's look at the Q2 numbers from Money. GAAP revenue, US $882.8 million. That's up 70% year on year. 70.
70%. Wow.
Adjusted EBITDA, also strong. U.S. $255.3 million, up 55%. And their loan book consumer and SME loans outstanding nearly doubled. U.S. $6.9 billion principal, up 94% year on year.
Okay, almost doubling the loan book in a year. That's aggressive expansion.
It really is. But here's the kicker. Despite that huge growth, they kept the asset quality high. Non-performing loans NPLs, the ones more than 90 days past, stayed stable at just 1.0% of the outstanding principal.
1% NPL. That's really low, especially with that kind of growth rate. That's the critical question, isn't it? How are they managing the risk so effectively while growing so fast? It points to, well, potentially very sophisticated underwriting or risk models, or maybe leveraging data from Shopee.
To be synergy there, yeah.
It suggests a really strong base for future earnings, especially since, as Mr. Lay said, many of these markets are still in the early stages for digital finance. And you see the investment reflected elsewhere, too. Sales and marketing for DFS jumped 123% to about US $123 million. They're clearly spending to acquire credit customers. And, as you'd expect with more lending, the provision for credit losses also went up significantly by about 93% to US $324 million. That's just part of the business.
Right. Goes hand in hand with the loan growth. Okay, last but definitely not least, let's jump into the gaming world with Garena. This segment, it's not just ticking along, it's showing real resilience and some smart strategic moves. Mr. Lane highlighted a very strong performance in the first half, and he really emphasized Free Fire. He believes it's established itself as an evergreen franchise, keeping users engaged and even growing its appeal globally.
Evergreen. That's a strong claim for a mobile game.
It is. And looking ahead, they're not just resting on Free Fire. They're exploring new genres, new markets, even using AI to push gaming experiences forward. That confidence actually led them to raise their full-year guidance for Garena. They now expect bookings to grow more than 30% in 2025 compared to last year. So the Q2 numbers for Garena. Bookings, that's the money committed for future spending, US $661.3 million, up 23.2%. GAAP revenue, US $559.1 million, up 28.4%. Adjusted EBITDA, US $360.2 million, up 21.6%. Solid numbers. Quarterly active users, QAUs, were pretty stable, up slightly at 664.8 million, up 2.6%. But here's a key metric. Quarterly paying users, QPUs. That grew significantly, up 17.8% to 61.8 million.
So they're converting more players into paying ones.
Exactly. The paying user ratio improved to 9.3% from 18.1% a year ago. And those paying users are spending more. Average bookings per user went up to 99 cents from 83 cents in Q2 last year.
That's what really stands out for Garena, the growth in paying users and how much each one is spending on average. That really backs up the evergreen franchise idea Mr. Lane mentioned. It's not just about getting new eyeballs. It's about deepening the engagement and, well, the monetization of the existing base and the AI angle. That's interesting. It's not just jargon.
You think it's more than that?
Could be. I mean, think about AI for personalized experiences or even generating game content dynamically. That could seriously extend the life and earning potential of a game like Free Fire.
Yeah.
Maybe even open up new revenue models we haven't seen yet. And importantly, their cost of revenue for gaming seems pretty stable, mostly payment processing costs. So they seem to be scaling this efficiently too.
Okay, so let's try and connect all these dots. What does it all mean when you put Shopee, Money, and Garena together? Across the board, you're seeing, well, impressive financial health and really strong execution on their strategy.
Yeah.
Just look at the overall operating income. It surged 488% to almost US $488 million. And net income, as we said, up over 418% to US $414 million. This isn't just growth anymore. It's definitely profitable growth.
Yes, that pivot seems real.
And it's consistent. If you look at the first 6 months of 2025, net income for shareholders was US $809 million. Compare that to just US $58 million in the first half of 2024. It shows the trend is holding, even strengthening.
And putting that into the bigger picture, think about the cash flow. Their operating activities generated US $2.37 billion in cash in the first half of 2025. That's nearly double the year before. And that cash gives them serious firepower to reinvest, right? Especially back into those high growth areas like the credit business, where we saw the loan book increase by over $2 billion. So it paints a picture of a company that's not just hitting its top and bottom lines, but also managing its capital really effectively, fueling future growth while at the same time getting more financially disciplined overall. They seem to be finding that sweet spot.
Yeah, it really feels like they're hitting their stride. So we've definitely unpacked a lot about Sea Limited today. From Shopee's record-breaking run and that crucial turn to profit to Money's explosive but seemingly well-managed growth in fintech, and Garena's evergreen gaming powered by potentially new tech. It's pretty clear all three legs of the stool are strong and contributing to Sea's financial health and that strategic shift towards, well, profitable, sustainable growth.
Which does leave you with a fascinating question to think about, doesn't it? As Sea keeps expanding, especially with Money's financial services growing so fast, and as they get better at monetizing Shopee and Garena, what does that mean for everyone else? What are the broader implications for the competitive landscape, for consumer habits, across Southeast Asia and Latin America in the next few years? It's a really compelling case study in digital transformation unfolding right now.
It's a fantastic thought to leave everyone with. Puts their whole journey into perspective. Well, thanks for joining us on this deep dive. We hope you're feeling a lot more well-informed about the fascinating world of Sea Limited.
Subscribe to my channel Report Stock.